Tesla, my Tesla. Now, people have a very false belief of Tesla stock. They look at Tesla stock as a risky stock to own. They say it's a risky stock, right? And I understand why they say it. It goes up a lot, goes down a lot, it's all over the place, it's got a huge beta, it's all over the place, right? I look at Tesla stock, and I truly believe it's more risky to not own Tesla than to own Tesla. And this is why I say Berkshire Hathaway, given how many energy companies are invested into and other companies over the years, I always said it would be smarter, and I've said this for probably 5-10 years now, it would be much more intelligent for Warren Buffett and the team over there to load up on Tesla stock as a hedge, because it's more risky to not own Tesla stock than to own Tesla stock. This is why Tesla remains a key position for me overall. Tesla produces almost as many babies as its CEO Elon Musk does. All right, some of you guys, you might get that joke. Some of you guys might not be on the up and up in regards to that. But it's incredible how many babies Tesla produces. If we go back, let's say 14, 15 years ago, this is all Tesla had. That was their business model. They sold these things called Tesla Roadsters. This was it, 14, 15 years ago. That was it. And it's hard to believe because now you look at this company, and this is what they sell. The Model S, the Model X, the Model 3, the Model Y, Cybertruck, the Semi, self-driving software where the car drives itself, worldwide charging network they have at this company. They have a solar business. They have an energy storage business that's taking off like a rocket ship right now. They have a services side of their business that's taking off like a rocket ship right now. We could call it a SpaceX type rocket ship. It's taking off. It's incredible, right? And in the future here, and we're not talking about the 50 years from now, distant future, we're talking about over the next few years, they're going to have a robo-taxi fleet in the market, Optimus, the Model 2, which is going to be their, I would say, worldwide mass market vehicle, and the vehicle of the robo-taxi fleets of the future. And imagine how many products, services you're going to see this company get into over the next 5-10 years that they're not even in today. We're going to be, oh my gosh, they made money from that. Oh my gosh, they made money from that. They could, if Tesla's the biggest player in the robo-taxi fleet, who's to say they're not going to become a massive advertising giant over the next 10 years? Who's to say that? Imagine every robo-taxi, I would say every robo-taxi. Imagine they got a 50% market share around the world of the robo-taxi fleet 10, 15 years from now. Imagine the opportunity for advertisements, right? Inside the Tesla app. Imagine food delivery through robo-taxi vehicles. Like, there's so many capabilities over this next 10, 15, 20 years with Tesla. It's unbelievable. And so what you're seeing today, just what you've seen over the past 14, 15 years is incredible. But I'm telling you, what you're going to see over the next 14 to 15 years is going to blow your mind because there's going to be so many new opportunities, so many new gold babies here that you never saw coming. Even somebody like myself that's bullish on the stock, I'm not going to see coming until it's right there. And I'm going to be like, whoa, I didn't even realize Tesla was going to get into this. Like, this ended up being huge for the company, right? Now, in regards to Tesla, this is a stock that can go through these short-term time periods when everybody doubts the company, right? In those sorts of things. And as they say in the market, when in doubt, zoom out. Look at this company. 2012, they did $400 million, a little over $400 million of revenue in 2012. This past year, 2023, they did almost $97 billion of revenue. That's one of the most historic jumps in revenue, maybe in human history. To go from 400 million to nearly 100 billion in a little over a decade, who else is doing that? I can't really think of anybody who did that. That's incredible numbers, right? And imagine where Tesla's revenue is going to be, let's say 10 years from now. Like, are we talking about a company that's doing $500 billion a year in revenue? Or are we talking about a company that's doing $1 trillion of revenue? I think that's a fair debate, right? Now, in regards to Tesla's team, it's a very special team over there, right? Obviously, you got arguably the best business person in history running the company, which I think if we were to have a very fair argument about who's the greatest business people in history, Elon's got to be up there. I would put Steve Jobs up there as well as one of the best business people ever when you look at his success at Apple, then going away from Apple, starting Next Computer, coming back to Apple, changing the complete game in regards to mobile devices and putting the company in the best position possible. And then his purchase of Pixar. I'd definitely look at him as up there. But Elon, obviously what he did with, what ended up really becoming PayPal over time back in the day, SpaceX, Tesla, Neuralink, everything they got going on there, it's a strong argument you can make that he's the greatest ever or one of the greatest ever, right? And then you look at the overall team. I've met a lot of these folks over the years through the private stock group, right? Some of these folks are so brilliant, it's not even funny. And when I say, I'm not talking about like executive level, I'm talking about like the engineers at Tesla. They're unbelievable. And so they're just going to keep producing more and more gold babies. So Tesla's one of the stocks, you own it, you screw the short-term drama. It's always going to be short-term drama. Elon did this, Elon did that. Tesla did this, Tesla did that. Oh my gosh, everybody on the news is talking about Tesla. It flipped over on the freeway. We've never seen a car flip over in the history. By the way, Tesla's rarely flip, but Tesla had a fire. Oh, we've never seen a vehicle catch on fire before. There's always just so much BS in regards to Tesla to distract from what's really going on over the long term, which is just very, very special. And so I'm up 700% on the stock. I have no ambition to sell this 1,700 share batch of Tesla shares. It's just hold it. It's going to go through these drama periods. The stock's going to go all around. But when Tesla makes its move to the upside, if you miss that upside move, you miss it all. Because when it goes, it goes. And it ain't coming back, baby. Number 67 stocks up here that investors must own is... Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. SoFi Technologies. So SoFi I really look at now, and the more I'm viewing this company, the more I'm realizing this is a must-own in a portfolio for folks. It is the future of banking. The way they position this company, and Anthony Noto's really positioned this company, it's the future of banking. For what everybody was in the past, this is the future of banking. When I really think about the future generations and how they want to be online first, how they want their products and services laid out in a simple way, and be able to understand how to utilize these things, SoFi's really got it. And so I think they are the future of banking. And it's not just that I think that. The numbers are showing it. Every single quarter, this company attracts a massive amount of new members, They're taking market share on the market. And they're doing this through all these different gold babies. It's not just they have one business line and that's it. They're do everything for you, from student loans to personal loans to banking to, which banking in itself is a ton of different golden babies in there, to investing, to credit cards, right? Mortgage loans, insurance. It's unbelievable. Now, look at the revenue of this company. Now, keep in mind, their revenue was very lame from 2019 to 2020, and that's because the government put on the student loan, pause there. That really hurt their numbers for a couple of years there, because that was a significant part of their business. But even despite that, they went from $700 million of revenue in 2019 to this year nearly $3 billion, right? From $700 million of revenue to nearly $3 billion of revenue. That's an incredible growth rate over a few years, and that's with the government kind of screwing them over on student loans for several years, right? Now, additionally, who wants to own a bank that doesn't make money, right? We all want to own a bank that makes money, and guess what? SoFi's starting to make money. So if we look here, this company, if we went back to these 3 quarters last year, right? The June quarter, the March quarter, the December quarter. If you total those up, that was a $132 million loss. If you total it up, the previous year on those 3 quarters, it was over $300 million loss back in 2022. Now you're $123 million in the plus on those 3 quarters. So this is very exciting. That SoFi is now a real net income machine, because that's obviously very different than the company's been, right? Now, if we think about traditional banking, the branch network was phenomenal for a long time. And this is about to go, in my opinion, from a positive to a huge negative very rapidly over this next decade, essentially. So when we think about the branch network of all these big banks, Chase and Wells Fargo, Bank of America, all these big dogs, right? That branch network was always phenomenal for previous generations, because a lot of the previous generations, they like to go to the actual bank, right? And they do their banking inside an actual bank. Now, the younger generations, like we don't care to actually go in the bank. Like the only time we would ever go in a bank is if we're forced to go in a bank because we have to do something like literally in that bank or something. But for almost all of us, do we ever go to the bank? I mean, even my banker that I personally deal with, he doesn't even, I don't even usually go to him. He can come to my house and we can do whatever we got to do at my house, right? Like that's really the future of banking. And the future of banking is like being able to do everything on your phone that you need to do. You don't have to go. Now, all these traditional banks, they have these huge branch networks, which is great for the older generations because those folks love to go to the bank. But I'm telling you, the newer generations don't care. And so now these big banks are stuck in they're stuck in a bad situation because they could shut down their branch network. And guess what that's going to do? Their current customer base is going to flip out because the lady that's 65 years old has been going to the bank for her whole life. You can't just shut down that bank on her. She's going to flip. She's going to go crazy, okay? You can't do that. So you got to keep the banks open for a lot of the older generation, right? And meanwhile, SoFi is able to be asset light because they're attracting more of the millennial generation, the Gen Z, right? Gen Alpha, as that group will age up, they'll attract those folks as well, right? I think they're the most well positioned to attract those folks. And so what you'll see is SoFi be asset light. These other ones asset heavy, and that's going to hold those big banks back over this next 10, 20 years, while SoFi is just going to emerge as kind of the best position, and they're with the best technology. And then they have their Galileo platform as well. It's absolutely phenomenal, right? So that's going to be very interesting. Now, SoFi, I have 3,100 shares of SoFi in this portfolio. I do have some shares in another portfolio or two as well. I have to watch sizing on SoFi, though. It is a bank. At the end of the day, it's a bank, and these do come with risk. And so I can't go crazy with it, but it is a stock I view as like you have to own this one because it is a future of banking. So to not own it is just crazy. Like it's one of those stocks you got to have positioned a little bit. You don't have to build it into a big position. Like I feel comfortable. If I got 3,000 plus shares of stock, like I'm good, right? Or 5,000 shares, like I'm good. I don't need to own 50,000 shares of stock. I'm good. Next stock up here, 7 of 7 that's a must own is PayPal. Another financial, but it's a very different financial than something like a SoFi because PayPal is not really a bank. They do a lot of fintechy type stuff, right? No, PayPal, you got to understand, they have 3 really large, very important platforms. They have PayPal, which is their big dog. They have Venmo, which is insanely big in the United States of America specific, right? And then they have Braintree, which is really the payment processing of a ton of companies on the backside, right? Now, these are assets that have been seen as all underutilized. So everybody's viewed, at least from Wall Street's perspective, PayPal, Venmo, and Braintree as all being absolutely exceptional places to build a business, but they view it as the previous CEO was not like executing nearly high enough. So that's where comes Alex Chriss. He comes in, very important executive in Intuit. Intuit's one of the most loved great stocks in the stock market. And Alex Chriss comes in here and he's doing pretty dang good right off the bat, right? Now, even despite PayPal not utilizing those assets nearly as well as they could have, PayPal, Venmo, and Braintree, the company's still been Mr. Consistent, which speaks volumes about how great PayPal's business model is. That you have 3 core businesses that have all been, at least in people's opinion, underutilized, underleveraged, and yet you still put up these sorts of growth rates. $10 billion of revenue, 13, 15, 17, 21, $25 billion of revenue, 27, nearly 30. This year is going to be way, way, way over $30 billion plus in revenue, right? And that's with an underutilization of those different platforms. Incredible to think about that, right? Now, if we look at the latest quarter in regards to PayPal, they had huge earnings per share beat. They also beat on revenue by $64 million, so love to see that. In regards to PayPal, the risk reward is just too attractive to not take advantage of, just to be quite frank. The forward P on the stock somewhere in the 14 to 16 range, like that risk reward profile is crazy. Like you can't avoid a stock like this, right? Now, looking at if we want to run kind of numbers and projections on 1000X here, I ran them with a 7% revenue growth rate, which is under where they've been growing, right? And I think there's a decent probability they could beat that over the coming years because Alex Chriss innovation going on there. And I had them doing 12% net income growth, which is horribly slow compared to how fast they've been growing net income recently. So with 7% revenue growth and 12% net income growth at a PE ratio of 20 to 30, which is fair for the stock. This would put the stock at 104 to 156 in 2026, which would be a compounded annual growth rate on the low side of 20% and on the high side 47%, right? In 2028, even with these very lame numbers I have here, which is not good, 7% revenue growth for PayPal over the next many years is not going to be good. I don't think Alex Chris would be satisfied with that, just to be quite frank. But this would put in 2028 a share price of 130 to 195, which would be a CAGR on the low side of 16% and on the high side 28%, with disappointing numbers, right? And that's why PayPal has to be a big position for me, and that's why it is a big position for me. 3,105 shares in the public count, and I've had thoughts about, maybe I'll sell some shares. I've had thoughts, but the more and more I see Alex Chris innovating here, the more I see this team going, the numbers coming in, the more I'm like, I can't really cash this one right now because it's actually just too valuable. And it is seen as a must-own stock, and the CAGR looks pretty darn attractive over the coming years. Okay, guys? Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Nvidia will surprise the upside. Let's get into this one.
Sees more upside for the space and is looking to buy a mega cap name he actually sold just in July. He's the founder of EMJ Capital. Joins me now. Welcome back. It's good to see you.
You too.
Well, you don't feel like being out of Amazon that long, I guess, right? That's the one you sold, and now you got your eye on it again. Why?
My favorite three, Scott, in the Mag 7 right now are Apple going into the iPhone upgrade cycle this fall. Then Meta, because they're at all-time highs. They're really the first poster child of somebody who's making money hand over fist from AI. And then, of course, Nvidia, the godfather. But after that, it's Amazon. And I did sell out of it in July, but it's darn cheap on a 5-year basis. It's like trading at, all-time lows on a forward PE basis.
True.
Nothing really was wrong with the quarter that they just reported a couple of weeks ago. So I think they are definitely one that's on my radar, and I plan on adding probably in a few weeks as we start to get closer to the next tech earnings season.
Yeah, if people don't have an entree to their portfolio and you're looking to add an entree, you're looking to add that piece of steak, that chicken, that shrimp, that salmon, guess what? We got it right here, baby. Amazon over the next, I would say 12 months, definitely looks like a very attractive entree adder. Same thing with Meta.
Well, we can't get to the next tech earnings season before we get out of this one, and we still have to consider Nvidia a week from today.
Yep.
How do you see that?
I mean, it's huge, obviously. It's the most important stock in the world right now. Yep. So, if they laid an egg, it would be a major problem for the whole market.
They're not gonna.
I don't think they will. I think they're going to surprise to the upside. If you look ahead at sort of what
Be careful, though. Be careful. Because the NVIDIA, the problem with NVIDIA, they have to do so insanely ridiculously great now. Because they've been doing so insanely ridiculously great. So now, even if they were to beat these numbers, right, and beat the guidance, they have to beat it by so much to make people say, oh my gosh, NVIDIA is so amazing, right? You're talking about the A+ student. And if they get anything less than an A+, people are looking and like, what's going on here? Why no A+, right? And NVIDIA can't even come in with an A- now at this point in time.
Is counting on a go-forward basis. It's almost like this explosion of AI revenue that they've seen over the last year and a half, is going to just sort of dry up. And I just don't think that's the case. Eric Schmidt gave a talk at Stanford recently. It was sort of leaked a few days ago, and they took it down off of YouTube because he made some critical comments about the work culture of Google. But embedded within that talk, one of his throwaway lines was, in talking to Sam Altman, they said that
They shouldn't have took that down. What a bunch of freaking babies. Come on, man.
Both believe that each of the hyperscalers, plus the OpenAIs of the world, we're probably going to have to spend something like $300 billion in NVIDIA chips over the next few years, each. $300 billion each. So, Nvidia could basically only supply those hyperscalers and their order book is going to be full for the next 4 years. It's a massive, staggering amount of money that's sitting in front of them. And, God love the Broadcoms and the AMDs of the world, but, the vast majority, like more than 95% of that revenue is going to go to Nvidia.
Well, I mean, how do you just talked about, I mean, obviously the money that Nvidia makes is the money that the hyperscalers are spending. So at what point do you look at what the hyperscalers are spending and say, you know what? It might be a little longer for the ROI or the return on invested capital side of the story than I think we're willing to admit. How should we look at that?
Well, I think that the Meta is showing now that they are making a lot of money from this.
Sure.
And that's why their stock is mid 500s right now. So I'm starting to think that Zuckerberg was sort of leading us on several years ago when he was saying that he was spending all this money on Reality Labs and people panicked and sold the stock down to $80. I kind of think he was trying to throw off his competitors by just spending all this money on NVIDIA GPUs so he could get a head start of them. So he's
100%. And he's specifically stated that they have a lot of other AI expenses in regards to the metaverse line. So everybody looks at the metaverse line like, oh my gosh, look at the loss is so big. They don't realize there's a lot of other spending that's non-really metaverse related in there. He said that before in conference calls.
Now, if you're sitting in the seat of Andy Jassy, or Microsoft or OpenAI, are you going to let another one of these competitors just take the lead?
That's why you got to listen to conference calls on 1000X, baby. We got them right here. So important. You're going to find out so much information on those conference calls that no one else has a clue, because most people, they don't want to spend the time listening to these dang conference calls. Let's just be honest, okay? They do not want to spend the time listening to conference calls, and it's very, very valuable.
Become the dominant player in AI going forward. I just don't think you can do that. And you're only spending a minority in some cases, or just certainly less than your annual free cash flow that these companies are generating. So you're not going to spend that money just like leaving it on the balance sheet, and you're not going to
100%. Yep, well said. And so as far as Nvidia goes, very high expectations. They got to come in, knock it out of the ballpark in regards to their revenue, EPS. They got triple beat, and they got to beat by quite a significant margin to kind of keep the momentum going here, which it's possible they do, but it gets more and more difficult each quarter.
Saying that the shipments for this quarter when it comes to the iPhone might be better than expected. Well, you're making a face.
I don't know. I mean, skeptical? It could be, but the stock is up 32% since May. So I was really aggressively buying this stock. I got to a 9% position in my portfolio ahead of the quarter, which was not easy to do. But I felt really confident about it because the expectations were so low. You had downgrades every day. You had numbers coming down every day. Negative commentary every single day. And so I beefed up the position from my 1% holding to 9%. And now I just think it's prudent to trim because it's up 32%. They did have a good quarter. The iPhone refresh cycle could be good. It may not be. It may be a little more delayed, might be muted in the beginning. And then AI, as it gets into more phones around the world.
No, people don't care about AI. It's going to be the biggest iPhone ever. That's all people care about. Like, I don't know how many times I got to tell people this. Like, they think like the consumer is a lot more intelligent than they really are. Listen, it's the biggest iPhone ever. And people are going to make a big deal about that. Oh my gosh, I got the biggest iPhone. It always does well, every single cycle.
But that might not be the next quarter event, in my opinion. And I think we all expect services to be strong. It will, about 14%. That's certainly positive. And I think they've done a really great job on margins. We talk about margins before. So adding it all up, I don't want to be negative. I'm 5%. My index is almost 7%. I just wanted to take some gains.
All right, so you don't want to be negative, but it sounds like you're a little bit skeptical. So I just want to read a little bit more from this note from Luke, by the way. The rest of the thesis here is that Apple's in a position to create itself as consumers' Gen AI base case.
I just wanted to take some gains. Is not an intelligent way to think about it. I mean, you got to look at it from more of a holistic standpoint of like, maybe the P is really high, right? Like, let's say you're like, you know what, I own a lot of Apple stock. I don't really like the forward P. It's really elevated on the stock. That could lead to potentially, not much performance to upside over the next couple of years. And I think there's some other opportunities. That's a fair point she could have made. But just to say, you know what, I wanted to take some gains. It was a certain. That's not like good reasons to sell stock, guys. good reasons to sell a stock is like the valuations got too pushed on the stock. I don't feel comfortable with it here. I was buying the stock when it was a 15 forward P. It's now a 30 plus. You know, I feel like there's a great opportunity in this particular stock over the next few years. Is very undervalued. It reminds me of Apple when I was at Bed. Like that's a good reason to sell a stock. Bad reasons, it's a certain amount of waiting. It's done really good recently. It's up a lot. Like, no. Okay, that's not valid reasons to sell a stock. All right, guys, appreciate you joining me as always. Thank you so much for being here. If you're looking to get full access to 1000xstocks.com to get all these different things, including our valuation tools, our financial tools, our metrics, our education portion. Have you seen our education portion? Woo, it's second to none, baby. These are phenomenal, including how to value a growth stock. Oh, you gotta be flipping my flapjacks. Incredible. So if you want access to that, as well as my private group, private stock group, wealth group, pin comment down there today, click on that, fill out an application, and we'll see if we can get you access to everything maybe next week. All right, guys, much love and have a great day.